Okay, so now we know both Keltner channels and Bollinger bands, and we have established the thought that buying options makes sense when there's not much volatility happening, when these are tied together. But the question becomes, what is tied? And there is a way to measure that with Keltner channels, because Keltner channels measure the size of these candles, whereas Bollinger bands measure price volatility. So if I add Keltner channels in here, and let's put 1.5. An exponential. Where did they go? I'll probably need to change the chart again. Okay, just disappeared. I'll do that. Let's check Microsoft for a moment. And alright, now I need to fix the colors. So the lower band, I'll make that. I can keep that red, actually that's quite fine. The midline could be white. So now there is this yellow and the white one are the kind of the 21 period exponential is here, the 20 period symbol is here. So you kind of see how this exponential moving average reacts much faster to price movement than the simple moving average. So that was basically the difference. The period is pretty much the same, but the movements or the reaction speed of the exponentials is quicker. So this could be one way to measure when the Bollinger bands are close together. Here the Keltner channels, the red ones, are outside of the Bollinger bands, so the Bollinger bands are within the Keltner channels. And I chose here 1.5 times the average true daily movement range because that is how John Carter defines a squeeze in the Bollinger bands. I like using that indicator quite a lot. So basically here is a squeeze moment. The Bollinger bands go within the Keltner channels. Here would be a great time to buy some options, and if the guess would be that this goes higher based on something, then well, actually here it starts moving higher, it starts moving higher.
Market data connection lost.
These lines are still within the red ones, and there the squeeze fires.
Market data connection re-established.
I'll add now the second Keltner channel, so that would be 2 and 21 and exponential, and I'll put this color to be, I'll make it actually, I'll change that Keltner channel to be lower band is dotted line, upper band is again dotted line, and on those Keltner channels I will change the colors to be, let's say, green and thickness higher so that it's easier to see. Upper band also green and thicker. So there, that's the second one. So previously we said that buying somewhere around the middle is a good idea and selling as soon as it goes to the second one is a good idea. So here would be a kind of, there's a squeeze situation. The Bollinger bands are close together, so options are rather cheap. The blue ones are within the red ones. Go long here, buy, and sell at the green line. A good trade. I'll check back to Pinterest now. Here was a long period of squeeze. These Bollinger bands were inside the red dots for a long time, and when it finally started going, then boom, it goes quite far. And there is an easier way to see this. It's called TTM squeeze. No, squeeze, ST squeeze on this one. and it basically draws a red dot when there is a squeeze. So now my settings are not like here, 220, 1.5. I should probably just use 20 for the Keltner channels too. 20 and 20. Maybe it matches now. There is a squeeze here. Now that's still slightly off. Still slightly off, pretty much. Pretty close anyway. So the idea is that with some settings the Keltner channels are around the Bollinger Band, so there is the daily movement is still there, but the volatility is there no longer. So this is much easier to read. I don't actually have my chart like that. I'll just watch this instead. So when there are red dots, there's a squeeze going on, and when there are no red dots, the squeeze is no longer on. So I could just like now take at least these Keltner channels away and take the Bollinger Bands away. And what we have left, if I add another set of Keltner channels, actually I'll add 2 sets of Keltner channels. This would be the third. I'll just make it the 21 that I used earlier. That would be, let's say, white and upper band white, and the center line I don't need to see. This one I don't want to see the center line. Let's put that as the 1, and I wanted these to be exponential. I don't need to see the midpoint in here either. The first one, I can keep that red, and here the midline should probably be some other color that I can see better. I'll make that yellow. These are different colors than last time, but the idea would be that as we're here, Pinterest is going higher. You remember these kind of train tracks or whatever. It's going higher. There it is kind of still in an uptrend, falling lower. The squeeze is on. Maybe it's a good idea to buy here, sell here. It falls, climbs back higher, squeeze is still on. Now we here the squeeze momentum. These are squeeze momentum bars, so they start climbing higher. Here the price starts climbing higher. Here, buy somewhere here and flip the options out of the third Keltner channel. So that's kind of how it's possible to make viewing these charts easier. There was a squeeze. At that point there is no longer a squeeze. The price is not yet very clearly going anywhere, but finally it got going. So very easy time to kind of buy. The Bollinger Bands are tight in here. This just means that the Bollinger Band started getting wider than the Keltner channels. That is probably because the Keltner channels became so small because these candles became super small. But the movement really started slightly after. Here was some kind of squeeze situation. A good area to buy, because it means that the options are usually cheaper than at other times. Also we are between the red lines, or the price is between the red lines, and then sell the options here. There was a nice squeeze. Momentum started climbing higher. Squeeze. This starts going higher, maybe by, except that it comes right after downtrend. That's not so clear. Maybe I'll try to find some other examples. For example, metal. There's a squeeze, or there was a squeeze for a long time. Price is clearly in an uptrend. Momentum was negative in here because it fell lower there, but it starts it bounces and it starts heading higher. So a good time to buy metal, right? And just keep holding. Maybe already sell here at the second one, or wait and see if it can reach the third one now that the squeeze has fired. There was a squeeze. Price was here and reached the third one. If you held, a good trade also then. There was a longer squeeze. It was uptrending, or trending higher, but then there was a period when it may have gone lower too, but the previous trend was still higher. And there it seems that it's becoming an uptrend again. Squeeze is still on, there's not much movement, so here would have been a very good place to buy metal and then hold for the third Keltner channel peers, sell the calls here and start waiting for the next one, which actually came shortly after. There was a squeeze. It was a massive one, but it was after an uptrend, so it's not so clear. The squeezes tend to work the best towards the direction of an existing trend. It's a trend following trade. Now of course the trend can change, but it's usually easier to trade this toward the direction of the trend if there is a clear trend. There is a squeeze also on THC. This is a clear uptrend. The price is within the reasonable buying area. Momentum is for now going lower, but it has never been red. So this to me looks like a good bullish trade idea. Here was a previous trend. The momentum was going lower still, but the price was actually already going higher. It was still within the reasonable range, and then something happens. Sell the calls as they go far above the third Keltner channel, because it's very likely that after that there's not much action going on for some time. There was a squeeze that fired short. It was in an uptrend, so you see this does not work every time. It's not an automatic I win button, but it just shows that kind of moments when the option prices are cheaper than, for example, here, because the volatility has gone away. There was a downtrend on THC, a very, very clear, beautiful downtrend. The price is within the reasonable buying range for put options. The squeeze momentum starts going lower, and then we get a nice movement. There would have been a nice time already to sell away the position at the second Keltner channel. So from, I don't know, from somewhere here to here, that's $2.50 of movement, or $2 of movement. Anyway, it does not work every time. There was no clear trend anymore, not an easy trade. And once the momentum turned higher, it started to be a bit late. Of course, now somebody brave would have bought it here and made a good win, but that, well, what else? Nice downtrend, a squeeze down, nice entry zone, bounces back down from there, and there a very good win. Another squeeze going to the to this area here, very conservative buy zone, and a nice trade down, just 1, 2, 3, 4 days, or 3 days, 2 days actually, to reach the third one, pretty much. Very quick win. Very nice downtrend, a squeeze, conservative entry area. Why not take a short? Okay, get out of the position for a good profit. So using the squeeze indicator makes things much easier. This is available for free on Tastyworks, for free on Thinkorswim, but on interactive brokers you need to pay something like €50 a month to access this one. So I don't pay for that on interactive brokers, and I was trading on interactive brokers for 3 years. I simply use those I put a lot of lines on my chart then to see that. And I use different charts. I don't actually keep these on my charts either. But when I am in a trade, I like to put the third and the second one on to see where I would like to start taking my money out. If I'm planning to enter the trade, I keep the first ones visible so that I kind of see the reasonable price, the buy area for those options. So that's how I use the squeeze, and that's how the squeeze works.